rate action. Does that also continue because the stance is the same? And to continue with what Govardhan asked, you have repeatedly said that there is this third force. I mean, there was COVID, Ukraine, and now this third factor. How has that altered Reserve Bank's thinking? Have you also changed mentally your peak rate, in terms of how much action will be needed from the Reserve Bank? And just one small question on liquidity.
I think liquidity, because I'm losing track. Okay. The first one you said is with regard to, before front loading, I think you talked about, front loading. You see, front loading, if you see, to best of my recollection, it's not there in MPC resolution or in my statement. Front loading has been mentioned by the individual members of MPC in their respective minutes. MPC resolution over the last 3-4 meetings and today, we have not used the word front loading. That is the perception of each member. So therefore, all that we have said in the MPC resolution and in my statement is that it is calibrated to the evolving and anticipated situation. Now, the second question you asked was about the
third war, third factor, as you pointed. Has that changed your perception of peak?
The third major shock has indeed been a shock. It has further accentuated the overall situation in the global financial markets. It has had its impact on creating excessive volatility in currency markets in particular. When currency depreciations take all over the world, they happen all over the world. Let me talk about Indian situation. Naturally, the whole scenario of inflation, imported inflation plays out, and that is built into our inflation projections. Currencies are depreciating. Financial markets are seeing excessive volatility. Bond yields, our bond yields have moved in a very orderly manner. But world over, if you see, bond yields are very volatile. So the third shock, as we see, has added to the already heightened uncertainty which was prevailing. And the forward guidance given by, the US Fed in particular, also talks of future rate hikes, and they're pretty big rate hikes. So therefore, the overall stress on the global financial system has become much more in the aftermath of the monetary policy tightening and communication by the advanced country central banks. Nobody is blaming anyone. They have their domestic necessities and requirements for which they are doing, but we have to deal with the spillovers. I think liquidity will revisit, or you can ask now. So because one question per person, I think will be.
No, liquidity is a very small question. It has been remaining in deficit for a goodish bit, and now there'll be withdrawal of currency because of Diwali, and then again advanced access will come. Can you give a little more assurance? At the moment, it almost looks like banks are borrowing from MSF and have to invest in the bond auctions. So, will you give an overnight BRR, something like that?
Yeah, overnight I have said it in my statement that as in the past, we will continue to do the fine-tuning operations on both directions, to absorb as well as to inject. But coming to what you said, liquidity being tight, let me say very clearly, the liquidity is not tight. The net LAF continues to be in surplus for the last 2 years. More than 2 years, the net LAF continues to be in surplus, except I think maybe 2-3 days when because of this, the standing liquidity facility, as we call it, the SLF, for the primary dealers, if you take that into account, then it became deficit.
Mogia Steel presents